Aloha, this is Brian Watkins. This is practice number 2 for the QuickBooks module. So set up your transactions where you can get at them quickly. Open QuickBooks to Express Start. And if you recall, the first paragraph of your QuickBooks exercise will tell you what company and what business form to use. So here we're going to name the company after yourself. Select a retail shop or online commerce, and then make it a partnership. So Express Start, this is QuickBooks practice number 2. For you, it's your name, and the industry is near the bottom here. It's a retail shop or online commerce. Okay, and our business type is a partnership. Very important to get that right, because otherwise you won't see the correct accounts. Now we're going to create the company, but be prepared to wait a little while because it takes some time. Don't hit the keys while it's creating the file. You might end up freezing your computer. Okay, when you get to this screen, start working. Don't worry about entering business or entering business information. You're going to do that in real life, but here we're just trying to get names so that you can see how to do simple transactions. Now, when QuickBooks opens, you're going to have to wait a little bit because it wants to open some other stuff too, specifically the Accountant Center, which is just a control screen so that you can jump off to another part of QuickBooks. But we're not going to use that. So we close that, go to Edit, Preferences, and we're going to go General and take the beep off. Okay, that'll be helpful to you if you're in the library. We can keep things a little quieter. Okay, next one. Edit, Preferences, and go to Items and Inventory. And we're going to check the box. Okay, that one you've done before. So we hit OK, close the windows. Now, this time, you have an extra thing to do, and that is enable sales tax and set a sales tax rate of 10%. Okay? So we go Edit, Preferences, go down the list to Sales Tax. Go to Company Preferences, and yes, you're going to charge sales tax. Now, you're probably going to charge sales tax in every state that you can sell things to via the internet. So we're going to add items for each one of those. In my projects, we're just going to do one, okay? Because I know it's all the same for any state. So we're just going to type sales tax instead of like California sales tax or Utah sales tax. The tax rate is 10%, and the tax agency, State Tax Authority. Every state calls it something different. The state tax collector, the franchise tax board, Board of Taxation, whatever it is. So we're going to quick add as a vendor, and then we're going to OK, and another screen will come up, and just leave it alone. Those two boxes need to be checked. We'll hit OK. Alright, now we're ready to start. We click on the Home button. This is our home screen, has everything we need. The first thing we do is go to the bank, click on it. It reminds us we haven't opened a bank account. So yes, we create one now. And we'll just call the Bank of Laie, as we did in the first exercise. And look at our deposit. We're going to deposit $10,000 into an account, $5,000 from you, $5,000 from your friend John Walker. Each of you have an equal amount of equity in the partnership. It's now January 3rd. So let's start by making it January 3rd. Back up here. January 3rd. Let's put in our money. So when you quick add, you are an owner. Put your name there. And you are going to be partner number 1. And this is going to be your equity. So this is your initial investment. And you're going to put some cash into the business in the amount of $5,000. Likewise, your partner is an other. And you're going to give them partner 2 equity. It comes pre-programmed for 2 partners, but you could add as many partners as you want. Cash, $5,000. All right, so everything looks good. We have the 3rd of January, total of $10,000. We'll save and close the deposit. Okay, now if you needed to look at that again, you'd click on deposits and do a back arrow, and then you could make changes. So close it for good, and let's look at the next step. We're going to buy hand-carved picture frames from somebody in Hauula who carves wood. And so we're going to have 100 koa wood small frames, 50 large frames, and 50 palm tree carvings. Okay, each of them have their own prices and sale amounts. So we go to purchase orders. It's now the 5th of January. We're going to sell to Hauula Woodworks. Add them to our vendor list. Now we have to program 3 different items. So we're going to add a new item called koa wood frame. And we'll just use the same description. And the cost of the koa wood frame is $15 each. And we're going to sell them for $35 each. So we put the cost at $15, the sales price at $35, and the income account, which always needs to be set, is merchandise sales. So that's our first item. Okay. It doesn't know what koa is, so we're going to add that to my speller. There we go. And we're going to buy 100 of those. Next, we're going to do a large frame. And the cost of our large frames is going to be $45 each. And we're going to sell those for $100. So we put 45, sales price 100, income account, merchandise sales. And hit OK. That's our large frame, and we're going to buy 50 of those. Finally, from Hauula Woodworks, we're going to buy a palm tree carving. But we're not going to sell it. We're going to use it and put it together with a clock. So the palm tree carvings are going to be purchased from the manufacturer, the carver here, for $25 each. So we'll put $25 for the cost, but we'll leave the sales price blank because we're not going to sell them separately. So that's the third item, and we want 50 of those. All right, so we have the first order of inventory. Let's double check everything. It totals 5,000. January 5th looks good. So we're going to commit the sales order, or purchase order rather. And if you made a mistake, again, you can click on it and back arrow, and you can pull it up and make changes. Okay, so we'll save and close the purchase order and look at our next. So we're going to do a second purchase order to Hong Kong Clockworks for 50 battery-operated clocks. They will sell for $12.50. Okay, so January 7th, we have a purchase order for Hong Kong Clockworks. And we will add them as a vendor. And it's now the 7th of January. And the item we're buying from them is a clock. Now, I used to have people enter the manufacturer's part number, you know, XJW200. You don't have to do that. The description is going to be a clock. The cost of the clock is $12.50. So we'll put $12.50. And like palm trees, we're not going to sell them separately. So we'll just set up a sales account. go. And we're going to have 50 of those clocks. And save and close. Now we're going to prepare and send check number 1 to the Honolulu Art Fair for $250 to cover costs of renting a booth. It's a simple check. It's January 10th. So we're going to write a check. Go up here to the print later, uncheck that so we can put the number 1 on the face of the check. Okay, it's now January 10th. So we'll make that the 10th. And this is Honolulu Art Fair. We're going to add them as a vendor. And this is booth rental. So it's clearly rent expense, $250. Booth rental at Art Fair. And you're going to go and sell a bunch of this stuff. So booth rental charge. Alright, there's our check. Our first check. We'll save and close. And let's go find out what's next. Okay. On February 8th, we're going to jump ahead. We're going to go to Hauula and pick up our order from the woodcarver. We have to pay a tax of 10% on top of the prices quoted by the vendor. There's no bill, so we're going to give them an item receipt, then create a bill, then pay the bill. It's very rare that you actually don't get a bill, but I'm going to show you how to do it just in case. So we're going to receive inventory without bill, and this generally happens when you have unsophisticated parties that are just doing business. Oh, February 8th, I can pick it off the list here, Hauula Woodworks. There's an open purchase order, which I click and say, yes, bring me that information. But I also know that I have to add 10%. So my 15 is going to be 15 plus 150, or 1650. 45, I'm adding 10%, and so that's going to be 49.50 because I'm adding 450. And then the palm tree carving, and I'm putting yes here to change the cost of the items. Palm tree carving, I have to pay $27.50 because I'm adding $250, so $27.50. Okay, now up here's a button you might need to use sometime called Recalculate. And it looks like my total is now $5,500. I added the 10% tax. So this is a receipt. The reason I do this is to give to the person who sold me so that later there's a paper trail showing exactly what I received from them. So I'm going to save the item receipt. And then I'm going to go across the top here to enter a bill against the inventory. So I've received an item. Now I'm going to create a bill for it. The vendor that didn't give me a bill was Hauula Woodworks. I'm going to use the item receipt date for the bill date. And I'm going to click on that line to select it. Okay, so whatever comes up here, I'd click on it, hit OK. There's my bill. Okay, I still have the date February 8th, which is when all this is happening. I'm going to pay it right away, so we're not going to worry about terms. I don't think we had terms. Yeah, they didn't give us any terms, so we'll just pay it right away. Let's double check everything's good. So this is initial order of wood carvings, and I'm going to save the bill. Then I'm going to go along the arrow to pay bills, and I'm going to pay the bill by checking the box, taking control of my check number, hitting pay selected bill, and saying check number 2. Okay, and the bill is paid. Alright, now the clocks are going to come. This time they're going to come with a bill that includes extra shipping and import fees of $125. So on February 10th, we receive with a bill, So I'm going to change that to the 10th from the clock company. And I'm going to click the purchase order and show that I made my 50 clocks here, 625. But I'm going to add to the 625 125 extra that I had to pay. So instead of changing the cost, I'm just going to change the whole total by adding 125 to 625, which gives me 750. And the memo here, okay, I've changed the cost for the clock. Yes, give it the new cost. This is the bill for clocks. And let's check the bill. Okay, there's no terms on it, so we'll just put a bill in our file. Let's say pay it in 30 days. We can choose. If there's nothing on the bill, you can choose the terms of when you want to be reminded about when it's due. So we'll save and close. And yes, we've changed the terms, so we'll do that. All right, now we're going to put the clocks together with the palm tree carvings and pay a young woman $75 to do the work for us. So the first thing we have to do is look at our inventory and create a new, not an item, but an assembly. So on February 12th, we go to our inventory activities, and we're going to, I went right to an adjustment. We're not going to do the adjustment yet. We're going to do an assembly. I guess it figured out what we wanted to do. And add new inventory assembly. And what we're going to do is take and build a palm tree clock. We don't have a cost for the clock. We do have a sales price. On the face it says we're going to sell them for $75 each. Now the bill of materials is a list of what goes into the clock. So we're going to have one clock, and we're going to have one palm tree carving. We have to have an income account. We'll put merchandise sales. Okay, in the old days, the bill of materials was a separate piece of paper that you would take over to the warehouse to get the parts you need to put together your inventory assembly. Here we're going to use it to incorporate the costs for those two items. So I hit OK. And then it says I've got 50 of each of those parts on hand. So I'm going to build 50 of them. And this is going to be the assembly of clocks. So once I've built them, so building, my inventory will change. So let's close this and I'll show you what I'm talking about. Go to Reports, Inventory Summary, and you'll see that we no longer have clocks on hand or palm tree carvings. We've taken all of those assets, combined them now in an assembly called a palm tree clock. So now that we have one assembly, the palm tree clock, we need to add $75 to it. Since it's when we add things to an item that are different, or that we're paying somebody other than whom we bought the item from, we have to use a special account. That special account is called inventory adjustment. So now we're going to write Rebecca Walker her check. She's not an employee. Employees we have to pay payroll taxes to. She's just somebody that's doing a special job for us. So as long as she controls the job, we don't have to pay payroll. She can do it anywhere she wants, anytime. So she's just a vendor. So we enter her as a vendor. Okay, now we're going to pay her money, and we're going to add a special account. This is not an accounting account. This is, we're just going to call it another expense, even though it's not an expense. What we're going to call it is inventory adjustment. This allows us to use QuickBooks to write a check and then slide it over to the item in question. If we use the items method and pulled up the clock, it would reset the price. It would reset the price to $75. We don't want to do that. So we're just going to use an inventory adjustment. So the assembly of clocks, and it will stick that, whoops, we should be on expenses. Inventory adjustment, click on that expense tab. $75, cost of assembling clocks. Now it's important to get all the costs onto the specific inventory item. So I'm going to close the checkbook, okay, and I'm going to immediately go to inventory activities. Okay, you cannot wait. You have to go right to inventory activities. And why is it not giving? Here we go. I wasn't clicking on that arrow. We want the adjust quantity value of hand. This is the adjustment screen. Try that again. Adjust quantity value on hand. There we go. And we want to change it to value. We didn't make any new inventory. We just changed the value on it. The account that we're going to take this money out of, we just opened, called inventory adjustment. And we're going to take and we're going to put on the palm tree clock, the assembled item. We're going to add to the value $75 so that the new value is $2,200. So I'm adding costs of assembly. Okay, so as soon as I do that, I now have a new average cost and a new total value. So I close that. And this is very important. Now when I go to my income and I put all, there is no inventory adjustment visible on the profit loss. If you ever see inventory adjustment, you did the procedure incorrectly, because the object is to take all the money you put into it and then take it out and put it back on the inventory item. Okay, so you've done it right. Let's cancel our report here. Cancel. There we go. All right. Okay, we've assembled the clocks. Now we're going to sell. So on February 25th, we're going to sell 5 koa wood frames and 1 large frame to Mr. Fred Carter. He gets a sales receipt because it's a cash sale. So Fred Carter, quick add him to our customer list. On the 25th of February, he's going to pay cash for koa wood frames, 5 of them, large frame, 1 of them. And this is our first sale. And note that the tax was computed by the machine, by the software. It's automatically put sales taxes payable into your accounting. So I'm going to save and close the receipt. This means we collected some cash, so be sure to deposit cash in the bank. We go to the bank. The bank says, is it that $302.50 you're talking about? We say yes. And it automatically did a deposit slip for us. So save and close. That's the first sale. Now we're going to sell 10 palm tree clocks to Haleiwa Art Shop on account, meaning credit, with payment due in 30 days. Okay, so that's an invoice. Same date, different customer. Haleiwa Art Shop. Add them. They're going to have our terms that we're giving to them. We're saying you pay us in 30 days. That's called net 30. And we're going to sell them 10 palm tree clocks. So quantity 10, code, palm tree clocks. The description will show up there, the sales tax, everything's good. And we'll say second sale. All right, $825, not a cash sale, save and close. There we go. So if we wanted to look, and we looked at our balance sheet, you would see an account receivable for that sale. It would not be adding to our cash. We'd also see a sales tax payable for those sales taxes that we've incurred, and an account payable for that bill that we had. So let's close it and go back here. So now what we're going to do is we're going to go and sell everything we have left to Hilo Hattie, February 26th. Now, you can run an inventory report, but I had a student show me an even better way to do it. So we're going to do a sales receipt on the 26th to Hilo Hattie, and we're going to quick add them as a customer. Now, we have Cowood frames. If we push this little icon here with the chart, it will tell us quickly that we have 95 available. Sell them all, 95. Same goes for the large frame. Okay, we have 49 of those. We sell them all. And then finally, the palm tree clock. We have 40 of them. So we're going to sell all 40. So this is a nice sale, third sale. And we've netted over $12,000. That's a great sale. But we're going to make that cash. Actually, they're going to give us a check, aren't they? So they gave us a check. I didn't give you a check number, so we don't worry about the check number. If you did, you'd put it here. Save and close. Close that up. Now we have to go to the bank because we got some money today. And we got that check. So we're going to take the check, and it automatically does deposit slip. And we pay that. All right, almost finished. Okay, we were sure to deposit Hilo Hattie's check. That's good. Now we're going to pay our bills by way of check 4, and then pay our sales taxes, February 28th. So we come up here to pay bills, check on it. We're going to assign check number, so we pay it with check number 4. We know it's in the past. Okay, done with the paying the bill. Now we go to the sales tax icon, and we're going to pay sales tax, and we're going to check the box for sales tax, but we're going to look at both of these dates. That's a huge problem on the final. Got to have both dates just right. So the check, February 28th, show sales tax through February 28th. We're going to pay all of the sales tax. And we hit OK. And now, just to be sure, let's go to our checkbook. Back up one. It didn't take it. This happens a lot. So we're going to go back to sales tax. Kind of glad this happened because it happens so often. Pay sales tax. Check the box. Okay. Check the sales dates. So I'm going to turn it back here. February 28th. February 28th. Okay, and hit OK. To be printed. Let's do that. We'll say, or maybe, yeah, just check number 5. All right. This time, hopefully it took. So we'll write checks. And there it is. I don't know why sometimes it takes twice, but I'm glad it showed up in the video because it's a very common issue. So just pay the taxes twice. Make sure you don't write 2 checks. If you did write 2 checks, then you'd have a check 5 and a check 6, and you'd take the one check, right-click on it, and you delete the payment. But since we only paid it once, we're good. Now you just go save that, and you go to Reports, Company and Financial. Let's do the balance or the income statement first. So we're going to change that to All. Print PDF, and I'm going to call it QuickBooks number 2 income statement. Now I'm going to do company and financial balance sheet. I'm going to save as PDF. QuickBooks Number 2, balance sheets. And then finally, number 3, which is a little bit different because it goes to the accountant menu. We're going to do the general journal. And we're going to say all. There's all our debits and credits. And we're going to save as PDF. QuickBooks number 2 journal. Save. All right. Now what you do is raise your hand in the testing center. They'll give you the code. And you'll just read off cash balance, $14,850, and enter it into the enter this into your quiz on Canvas, and hopefully you got it right. And you upload, and you're done. So that's number 2. Good luck.